Hello and welcome to this week's Ferrari Financial Market News Summary. This week saw the start of the pullback we've been expecting for the last 2 weeks or so, and Thursday was by far the worst day, where all indices across the board dropped dramatically and on high volume, which is quite significant. And although all indices showed quite a good percentage pullback on Friday, this was only achieved on relatively low volume. And because the bond yields seem to have found a ceiling, the 10-year note briefly touching 5.25% on Thursday and dropped a little back to 5.15 on Friday. Another reason for Friday's pullback was a drop of nearly $2 in oil prices, which helped to lift the market spirits. Our view remains, however, that this is just a short recovery and we're liable to see more selling during the next week or so.
The chart I want to show you now is the longer term 5-year chart for the Nasdaq Composite Index. The reason I want to do this is because not only do I want to show the obvious long-term trend line which we've shown before going along like this, I also want to show you the top line forming a very tight channel for the price movement over this last 4 to 5 years. And if I draw this top line in to where we are at the moment, you can see we've got the price movement staying within this channel quite deliberately and showing that we are in fact at one of those extremities at the moment, touching that top line, and we don't feel there is really any sparkling news out there which would convince the market to break through this top channel anytime yet and increase the angle of the upgoing trend. Therefore we feel the likelihood is still a return to the lower line again, which could be as low as 2,200 for the Nasdaq, and that is just returning to this long-term uptrend that we've seen over the last few years. And this could happen certainly within the next 2 to 3 slower summer months. The other scenario, of course, which we have to bear in mind constantly, is that we could be experiencing a fairly long-term head and shoulders pattern forming here. This being the left-hand shoulder. We've now risen up to what is probably the peak of the head of this pattern, and again decline down to around about the 2,200 for the Nasdaq could be on the cards for this pattern to be going forward to the right shoulder, which would be at about this level. And then the ongoing scenario from there, if it is a true head and shoulders pattern, is of course that in the fall we could then break through this sort of level, this level here, and experience a longer term downtrend towards the latter part of the year. We obviously don't want to see this happen, but we do feel it's a real possibility.
So last week's sell-off, followed by the recovery on Friday, afforded a great profit opportunity for all our subscribers following the Ferrari Financial Trading method. However, despite maybe a short follow-through rally on Monday, we do feel that during next week we're liable to see a return to heavy selling, as this distribution phase that we feel we've been going through really for the last 3 to 4 weeks, we don't feel is over anytime yet. These new relatively high levels for interest rates are really causing some concern to investors who have now changed their viewpoint that the Federal Reserve is not likely to cut interest rates in the near future, but continue with their holding policy. It'll be interesting to see if the selling continues next week. So we still favour an overall short position for the Nasdaq market. We feel that that long-term trend line will be tested during these summer months, and that would be our advice. Stay short. Until next week then, it's goodbye from London.